Good morning, everybody. It's Wednesday, June 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 5.5 at 444. July soybeans were up 6 3/4 at 1047.5, and July Chicago wheat was up 4 at 540. This morning we had ADP jobs data was out. Private payrolls up 37,000 in May, sharply below the estimates. They were looking for a number closer to 110,000. This number lowest since March of 23. This is ahead of non-farm payrolls that will be released on Friday. So I think everybody will be watching closely. The president had some pretty fiery Truth Social posts right after the report, going after Powell. So we should continue to see some back and forth there as it pertains to rates and rate cuts and things of that nature. I guess what we know this morning, looking at weather models, and I know we'll talk a little bit about it here as we start, but GFS, which is one run, got pretty significantly drier for the 8 to 14 day run, and kind of sparked a little bit of buying interest there overnight. And then I guess the last thing is, it's been pretty quiet on the trade deal front. They came out yesterday, and the White House issued a letter to several countries, basically saying bring your best deal, because these the tariffs are supposed to go back into effect on July 8th, I guess. So it's been pretty quiet. I think they want to see some movement, and I certainly think the markets do as well. So with that, Justin, I thought you made a good point here this morning that, it's interesting to see our market, how, fragile might not be the right word, but at least on edge for any slight change in a weather model, and you can, see some buying interest come in. So maybe give us a few thoughts this morning, and we'll throw around the room.
Yeah, thanks, Dan. As far as, this dry run, it's one run of one model, and most of the others disagree, or all the others, So, we're up a nickel in corn overnight, but I think it just kind of shows how much we've just kind of pressured these markets, and we're trading just ideal conditions, or giving up because of, the need to sell, all those kinds of things. So just a kind of a very small, I'd say, brush off story about a weather one run, was able to pop us pretty good off the lows. So yeah, I think it's, the market's kind of starving for some new news. Right now, like you said, trade deals are, I think we will start to get a lot of information, in the coming month, and just the time of year, weather market. I think we're getting ready to get into a more volatile time frame after being kind of lulled sideways or lower here for the last few weeks. So we'll see. I think right now it's still raining outside my office, so we had some good storms come through. You're going to need a real, in my opinion, an actual shift in the forecast, and multiple verified runs that it's going to dry out or get hot or whatever to really get market excited at all, or like some big trade deals or something of that nature. So
yeah, thoughts on the big news overnight, obviously, on this deal out of Michigan with trying to smuggle in this fungus, and certainly highlighted on the ag sector. I mean, it doesn't, there's conflicting reports and things of that nature, but just interesting to see how this will play into the whole negotiations and back and forth rhetoric with China.
Yeah, I mean, just from reading, I don't know all the details, but it, probably seemed more like, not more of a terrorist attack, but, a couple of stupid college kids that brought some stuff in their suitcase to study it. Both students, one in a China university, one in Michigan, both in the same field. So I don't think it's nearly as dire as it sounded or malicious, but, certainly probably a headline to use for negotiations with China, or paint China as more of a bad guy. But that's just reading some articles. Yeah, I actually thought yesterday, kind of some of the bigger news was just, Musk, openly attacking this big, beautiful bill, calling it an abomination. I do think a lot of people that voted for this current administration was because of Doge, was because of trying to get more of a balanced budget to cut waste, feed, and abuse. So I think there is going to be a lot of pushback. I'd like to see, curious what Trump, how he handles this, how the Senate handles it. I would think the Senate might shut it down now with Musk kind of being openly against it. So I think that'll be a really interesting thing to see how that. I mean, it seems like he wants his tax cuts to stay in place. So if he doesn't, if they don't change something, right, the current, tax cuts from 17 will expire in 25, along with a lot of other, variations of those tax cuts, and then some of the new stuff that he wants to put in, like no tax on tips, things like that. I think a lot of people are okay with that or want lower taxes, but you got to cut the spending. I don't think anybody's got the appetite for, $2+ trillion a year addition to the deficit. Their argument is that, all these things that they're doing, getting this investment from these other countries is to really spur growth, which is great. And that can help us grow out of these deficits, but you should start by a balanced budget first, because we don't know that these other things are going to work. So, and the bond market is really kind of telling us that it's not buying into the, slashing the deficit through growth yet, right? It's been really stubborn. It's been a problem. It's going to make our interest expense a problem, especially if you're still raising the deficit. So there's gonna be a lot of battles on this front, I think.
Yeah, and and as it pertains to us in ag specific, is we need to get some guidance on some of these things, 45Zs and some of the different, the RFSs and things of that nature. And so you hate to see the, what could be a negotiation piece for some of these folks and at the expense of others. It's going to be
well, we all, go in there and everybody talks about, I'll let you add this if I can add that. It's never about I'll cut this if you cut that. It's always about more money to more people. And I'm a big advocate against that personally. So, selfishly, yeah, it'd be nice to have 45Z in some of these things. Because we're an ag and we love growing ag, but every single group is doing the same thing. And that's why you can never cut anything.
Do you guys think that's why the stock market's acting so well? I mean, we don't have any trade deals. It seems like we're ramping up tariff talks again, all these things that were bearish. I'm guessing it's the spending, right? Atlanta Fed came out and talked about, they raised their GDP numbers to like, year over year, like 4.6% or something. So I'm guessing it's just economic data expected to come out because of this spending is going to look really good. I don't know. I guess that's my take. But I don't know if you guys agree.
Well, I think even the last couple of years, if you look at, our deficit, we're spending 20%. Federal receipts are 20%. Or actually they're 17%, but we're spending 20% of our national GDP on the federal government. So a lot of those great GDP numbers are federal spending. So yeah, probably Jason, to your point, right? Or we're just like, these guys can't cut costs, and they're just gonna make more money or go for growth, but at what expense? So
it's pretty fascinating to see the stock market still over 42,000 with everything we've been through.
There's a good argument that it explodes higher. I mean, if you not that that's good for, it looks good on if you have a stock account, but the buying power of the dollar, all those things start getting weaker, and it's going to be a problem. I think there's some real smart people talking about, Social Security, the way it stands, it's bankrupt in 2032. We're just like, no one's willing to address it in these things. No one's willing to touch it. So
it's like, what happens in that scenario? Like, we stop paying into it, or
well, it's someone else's problem. Once I'll get reelected maybe one or two more times, and then those guys will deal with it. So it's a systemic problem.
Ben, what's on your mind this morning?
We're at a point where you have to have a really open mind about what markets can do. For all intents and purposes, other than a big run up in January, markets have, especially new crop, it's been very stable price wise. There was a lot of conviction from cash traders going back to March, May, and then May, July, that every year this happens, that July is ultimately no good in the end. I ask the question of how many of those years did we plant 95 million acres? And right off the bat, the answer is not many, because we haven't planted this many acres many times in history. But I think that we're heading into, the potential changes in weather, option expiration. There's a lot open in the 450 and 470 strikes in July. And I think the spread that everyone is looking for probably shows its true colors after everyone is out, once we get into delivery period. So I don't know, maybe there's an oversubscription there. I'm going to go back to, if you tell me every, always, and never when commodities, I quit listening, because I think ultimately someone's getting ready to run into a brick wall. So I think we're going to head into get some volatility here, just based off weather, and that there's some strong convictions in these markets. And I don't know, I don't have a strong conviction on July SEP, July D's, but it has paid the short for the last, 5-6 weeks at a minimum. So we'll see. There's a lot here to happen, but I think ultimately it'll come back to weather and what we're doing there. So.
Very good. Dustin, anything to wrap grains here this morning?
Yeah, the July Brazilian real contracts new highs for the calendar year 2025 last night. So that's, one thing. We were talking about the big beautiful bill, and the impact it's going to have on the dollar. Ultimately, all these things we were talking about, Social Security 10 years from now, it all comes back down to like the hidden tax of, we just need to keep expanding M2 money supply. And you look at banks like Goldman Sachs, they're talking about potential 10% drop in the dollar for the next year. Like, I think everyone kind of sees the writing on the wall. This is a good business to be in, right? Grains, it's gonna be an export market. It's dollar denominated. That would be really good for this business technically. But that's why I don't think that you want to take. You want to keep an open mind. Like you could say, oh, $4 corn has been a very good cash price to receive over the last 15 years on average, right? Like a lot of times we're dealing in the lower threes for a cash price at harvest. I don't know that you can confidently say that that's going to be a good cash price for 25 or 26 or 27. We have to have an open mind that dollar denomination is changing, and that, just like our grocery bills have all gone up, just like our housing costs have all gone up, stock market's going up. We have to readjust our thinking when we've had near double-digit inflation for a couple of years. We've had the luxury of a stable currency for so long. I wouldn't be surprised to see spreads widen and flat price to hold steady this year, maybe even rise. So how do you hedge against that? I mean, you really have to take everything into account. And then we have incorporated some spreads into our program as well, too, in various ways. So.
Very good. Well, it's interesting you talk about, being an exciting environment and things of that nature. The old Purdue University Ag Barometer Index was up 10 points, 158. So Justin, your alma mater coming through.
Yeah, it's changed since I've been there. I don't see how that's possible.
They're excited. Everybody's having fun.
Yeah, I don't know who maybe they're like vegetable growers or some crop I'm not aware of. I doubt it's the wheat guys that are super pumped, or maybe they're all cattle producers.
Right.
Yeah. But I mean, you look at that barometer, you're like, so they're just as pumped as they were when we were twice as high in price.
Right.
Like, I don't think that's true.
Did they ever tell you what that encompasses? Like, how
that was after my time. I did not design that. I can tell you that.
It was a buyer survey.
Yeah, that's true. Yeah, right. Yeah, ag could be anybody, right? It's the cattle guy that's buying cheap corn, selling high price cattle.
Kyle tells us we got to check in with the boys in Iowa and see what their barometer is.
Yeah. Well, they can't see. There's so much smoke in the air over there. Wildfires, apparently. Yeah.
Yeah, you throw your mask on, Kyle. Be careful over there.
Yeah.
Right, real quick, stronger start yesterday in cattle. We kind of cooled off midday. And looks like in the hog side, we talked a little bit about it yesterday, but people trying to front run Goldman a little bit going into Friday. So I guess share a few thoughts here as we start the day.
Yeah, the rumor mill was cranking yesterday. I think, it was a really good start, but obviously the rumors of plant closures, reduced slaughter hours started to kind of permeate and circulate pretty quickly. Still kind of unconfirmed at this point. I think today's action will be kind of telling if that was true or not, but obviously like this market is very sensitive to anything bearish right now, just any news whatsoever. It turns on a dime. It's very quick to drop. So I think it just, tensions are high, emotions are high, risk is high, price is high. I mean, it just kind of seems like all of what we've been talking about for months and months now. But overall, the news wasn't too bad kind of coming into this morning. Beef was down just a little bit. You had choice down 56 and select down $1.59. I think all in all, everybody's just waiting to see what happens with cash. Open interest was still up, almost 2,000 contracts yesterday. So overall, we got some asking prices around 226 in cash. I think everybody's still kind of looking at it like this thing can still go. And the kill wasn't too bad, 121,000. So I think just the overarching theme really is still, kind of waiting and seeing what happens as we get into delivery period next week. And if that basis is really going to tighten up, just seems like Packers are kind of up against the wall right now and just don't have the ability to get anything cheaper at this point. So everything's still really tight from what it looks like. And yeah, I think the expectation is still for a reduced slaughter here. It sounds like their Packers are getting more and more further bought further out, which is I think holding us up in the near term. But overall, as we can see the structure of the market, the price starts to weaken up. So I think that's the big question mark. Is this kind of the time frame where we see those seasonal highs in beef? We see the Packers start to back off. And we're just everybody's watching and just taking it day to day because it just seems like cash market cannot break yet. So all eyes are on the beef. On the hog side of things, yeah, I mean, I think a lot more focus here on the back end of the market now that we've already saw a little bit of a pre-roll happening, June, July, and then the premium that August is holding to these two contract months is a little bit interesting. In the past, we've seen that denotes kind of a lack of herd expansion or just to kind of this idea that we're going to have relatively tight supplies in kind of the late summer. So I think there's going to be some speculation. I think that things may be on the tighter side as we kind of work our way into the late summer, but we'll see. On the other hand, cash markets have been pretty firm, been up about $4 from last week. Little bit of weakness in the carcass, down 64. So overall, kind of a mixed bag of news kind of going into the day. But yeah, the focus really is going to be kind of on the roll right now, and the longs moving from the front end of the market and probably out to the July and the August just over the next week.
Very good. Appreciate the update. A couple things to note. We got tomorrow morning, we'll have weekly export sales. They'll be out at 7:30 Central. We'll take a look there, visit about those in the war room. Also appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. We'll get a quick rundown of the markets here before we wrap. July corn is up 7 1/4. 445.5 is the last. July beans are up 7 3/4 at 1048.5. And July Chicago wheat's up 1 1/4. Appreciate everybody tuning in. Hope you have a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.